Okay, so very good morning. Monday the 16th of April. Hope everyone had a great weekend. Getting straight into things, and as you can see from the charts I'm sharing, I've got my charts pretty clean at the moment because I'll hand you over to Sam North, who's going to talk over a couple of the charts from a more technical perspective after I just give a wrap up of some of the weekend's news. And as you well know, obviously dominated by the military strikes on Syria at the weekend, so really that's the theme I'm going to talk about in a bit more greater detail as to some thoughts on how the markets reacted this morning, where we might go from here, particular with a bit of focus on the energy sector. One thing though, as you can see, is there isn't any kind of risk-off element to the markets this morning. In fact, equities are higher, fixed income lower, the 10 years down 6.5 ticks, the Bund's already down 50, having broken the low from Friday. Gold is down $3, so this is a lot of the market positioning. Obviously the rhetoric from last week meant that strikes at the weekend were looking probable, and so it hasn't caught the market by the greatest surprise. And the biggest element here is the fact, as we'll discuss in a second, it looks like there hasn't been, as yet at least, any aggressive military response from Russia, Iran, and so on, and the US and other parties in the form of UK in particular have talked about this just being a one-time only event. So the threat of escalation is kind of not there, at least at the present point of time, and as such the market isn't reacting negatively. In fact, if anything, there's a bit of calm restored at the moment. So let's just have a quick look and let me get you up to speed of exactly what happened. This is a chart of what took place at the weekend. The United States, France, Britain launched 105 missiles on Saturday, targeting what the Pentagon said were 3 chemical weapons facilities in Syria. This, of course, comes in retaliation of the chemicals weapons attack that took place back on the 7th of April. So as you can see here, there are the different areas in what the US were targeting in more of the southern part or southwestern side. A bit further up was where the British and French forces were targeting. What happens next? Well, international officials are working to try to confirm the suspected poison gas attack on the original city that took place. This is where France, the US and Britain are establishing a new independent inquiry into who is responsible for the chemical weapons attack in Syria. So this is obviously the big issue which a lot of people are focusing on from a domestic political point of view. Saif and Sam having arguments already this morning about the exact authority that the Western world has in policing these types of situations, when in actuality, I guess from a formality point of view, you don't actually know if there's a chemical weapons attack at all at this point. But certainly the strike has happened. And this leads us then on to a couple of other things which I wanted to discuss, and this is to give you a bit of idea of context behind the energy requirements of Syria, and then also what this means in Russia's involvement and Russia's importance for the energy sector in feeding the rest of Western Europe in that sense. So let me just point out a couple things here to be aware of. And oil, as I'm speaking, is already down $1 and weakening. And one of the main reasons I think why this is happening this morning is because the US declaration against Syria was that it was limited and a one-time shot. The US Defense Secretary Mattis also added that right now we have no additional attacks planned. So at the moment there appears to be no escalation of the conflict with Russian and Iranian forces, and of course this is absolutely pivotal for safe passage of seaborne traffic of crude oil out of, as we'll look at shortly, in the Hormuz and so on and so forth. US officials are said to have notified their Russian counterparts through the normal channels. So this is similar to what happened, if you remember, the airstrikes that happened on that Syrian airbase about a year ago. It's not that the Americans immediately fire the Tomahawk missiles by surprise. They actually call ahead and say this is going to happen so that they can evacuate all personnel so that there's minimal amount of casualties. The same thing is said to have happened on Saturday. US have notified the Russians that this was going to happen, and this is kind of an indirect signal in an attempt to avoid direct confrontation. Now, a few things to have a look at. Syria having little oil production of its own, the main concern then is oversupplies arising from a confrontation that could threaten key supply routes out of the Middle East. So this is what we're looking at here. The circle I've identified, of course, is the Straits of Hormuz. So just looking at the Persian Gulf, which is kind of right in the middle of the top 4 OPEC producing nations, Saudi, Iran, Iraq and Kuwait. And you can see the major South Pars and North Field where the highest concentration of production is coming out of, but then the traffic route that this has to go through, that pinched spot of one of the world's most influential choke points for the passage of oil. Now, to give you an idea in terms of size and what we have here, this Strait of Hormuz has, as you can see, by far the largest amount of seaborne traffic of oil. You know, way higher than anywhere else really on the planet, other than the Straits of Malacca, which is over in the Far East. But this is really what's quite key, and any escalation in Syria may also instigate unrest elsewhere in the region, either against the US or its allies, raising this threat to the delivery of energy supplies. So this is what the market's kind of, the reason why this is so key, this particular sensitivity to this geographic area. Having a look at oil at the moment, it is coming off, so I think some of that war premium has dissipated, which sounds kind of strange, I guess, given the fact that you've had a large-scale military intervention and the price of oil is falling. So again, this is market positioning, and really the price is moving on future expectation, and that is that so far it doesn't look like there's going to be a additional strike, and also Russia have remained relatively calm in their response thus far. The one thing to keep in mind though is when you look at oil on a greater time frame, so here we were at the beginning of last week trading a $62 handle. We are still quite elevated from where we were. I'll leave Sam to look at some of the technical levels that he'd be interested in, but one point that I did see was obviously a lot of people in the background are aware of the fact that in the supply and demand situation in the energy market at the moment, you've got US output continuing to push up at record highs. I think we saw another 0.62% increase last week to kind of just over 10.5 million. But I'd still say that this particular geopolitics is taking the driving seat, at least for the time being. Another additional factor to be aware of, even though the US are producing more on the supply side, we are approaching driving season. Now, some of the new guys, you might not have heard of this, but you do tend to get a seasonal pattern for the demand of crude at around this April timing of year, as we look ahead towards the driving season, which kicks off in the summer, which basically means that obviously the holiday period in America, people tend to drive. This gives a direct impact then for an increase in the demand side for crude. Also as well, if you think about OPEC, they've got their June meeting, so it's not too far away, but I could pretty much already tell you what they're going to do, which is extend the existing oil production cuts. So you've got OPEC still stepping in, cutting production with non-OPEC by that 1.8 million barrels per day. You've got driving season coming in. You've still got this kind of tension in the Middle East. I would say for me, this is enough to keep oil supported, at least for now, outweighing still this, what is fairly baked in, this oil supply situation at the moment. I think that the geopolitics and other reasons I've just mentioned outweigh that US rise, at least for now. A few other things here to be aware of. From a Russian energy news flow point of view, the President Putin condemned the airstrikes as an act of aggression against Syria and said he would convene an emergency meeting of the UN Security Council. So again, he's pushing for UN Council meetings. He's not firing tweets like you know who, and he's not kind of posturing and making really aggressive comments. So this is fairly, I would say, contained, and hence the reason why oil's coming off a little this morning. But any retaliation is not likely to involve a reduction of Russian oil and gas flows to Europe, according to several analysts I've read this morning. They say this, and this is what's quite key and why Russia is probably reticent to escalate this situation, is because Russia's budget is heavily dependent on their exports of these energy products. So just to give you a couple of numbers to be aware of here, Russia remains the EU's single biggest external natural gas supplier. The EU imported some 162 billion cubic meters of Russian gas last year. That's 33% of total inland demand. In terms of coal, Russian thermal coal accounts for 43% of total European Union import market. And a few other things to be aware of, again, to give you a layer of context. Syria, well, you tell me, how many barrels of oil do you think Syria produced before the conflict and civil war began in the spring of 2011? How much oil do you think Syria used to produce before the civil war began about 7 years ago? Let's have your answers in the chat. What do you think? To give you an idea, obviously top of the pile in OPEC, Saudi's producing circa 10.5 million. You scale that down to Iraq, more like 4.5, Iran around that level. Kuwait gets steps down another level. You've got your smaller countries like Gabon, about 200,000. Anyone want to have a guess in the chat? Okay. Someone's been brave enough to give me a guess. Good, thank you very much. 1.2 million. Good. We've got someone putting something out there. So Syria itself used to produce 380,000 barrels per day. Now, I would say reading that, I was fairly surprised actually they used to produce that much, because at the moment they produce basically nothing given the situation that's going on at the moment. So they were actually a fairly influential producer themselves not so long ago, but Syria has seen its production obviously fall to a fraction of pre-conflict levels, and the country is no longer able to export any oil. To give you an idea, Russia currently exports around 70% of its crude exports to European countries, particularly the Netherlands, Germany, Poland and Belarus. So again, there is political reason underlined by energy, which equates to money, which equals the Russian fiscal situation. So Russia's fairly even-hand response to what's happened, you know, isn't just Putin being a nice guy and being diplomatic. He needs to be diplomatic for a reason. And why? Because if you think about Russia in the last week, this was one of their largest companies, Rusal, they tumbled 20% last week as the US vowed to impose further sanctions on Russia. This actually meant, as far as I'm aware, the Russian government had to intervene to prop up the company, which is one of the largest within Russia. And obviously the ruble has been taking a fresh hit as the US has vowed to launch further sanctions. So it's this sanctioning which is highly detrimental to the country. Alright, so hopefully that's got you up to speed with the Syrian situation and some information there kind of beneath the surface of why these things are occurring, and hopefully to explain a little bit about why you've had a fairly calm response from Russia. This has also then reflected on other assets because, as I said, equity markets are positive. There hasn't really been a great deal of other weekend news flow to be aware of, other than it's all calm on the Western Front for the time being, I guess. Couple things to be aware of though for today and the week ahead, then let me hand you over to Sam. So in terms of today's session, what's the likelihood of any breaking comments to really spark a negative catalyst, i.e. to re-escalate the situation? I don't really see much that Trump can say, to be honest. Even at the weekend, Trump has kind of suggested that more could be done, but nearly every single person apart from Trump has said that this was a one-time event. So I think the market might look beyond that if Trump makes that type of commentary, if you start to see tweets breaking As per usual though, if he does tweet anything, I would say you need to be vigilant from around 11:15 is when he dropped the main one last week. I think it was last Wednesday. So that's the sort of time frame I'll be looking at, 11:15 AM London time to about midday if he is going to say anything. Otherwise, I think for the time being, we might move on from that situation, having been such a strong focus from last week. Looking at the calendar for today, there is actually not a great deal going on for this morning, so I still probably suggest a similar routine to last week where much of the focus will remain on the US session. Today, we do have retail sales coming out later this afternoon. That's pretty much the sole data highlight. You've also got business inventories and housing market index coming out this afternoon. I'd say the retail sales at 1:30 is probably your main highlight in terms of the scheduled events. Let me switch over to the calendar. Speaker-wise, nothing within our session to be too mindful of. Bostic is not speaking from the Fed until later. Taking a look at the week as a whole, though, I apologise if this is a bit small. You should be able to see it, and I'll walk you through it. A couple of the main things from a US perspective, other than retail sales today, tomorrow you get industrial production. You've got the beige book from the Fed on Wednesday. We've also got 10 different FOMC speakers in the week ahead. Particular interest might be on the Fed Governor Brainard speaking on Thursday. She typically is one of the more dovish members, to see what she has to say on the latest outlook, i.e. this trade talk, the geopolitics, the inflationary situation as it stands at the moment. How does she feel about the current Fed communication? That's what we're trying to monitor from the 10 Fed speakers this week, I'd say, going forward. Otherwise, Bank of Canada. On Wednesday, we get their policy meeting. We're expecting the Bank of Canada to stay on hold. As per usual, we'll get alongside this their latest set of economic projections in their MPR. So I would say more than likely the CAD currency movement is going to come off their forward-looking projections more than anything else. And then from Australia, for any FX traders, certainly for the live guys if you're looking overnight in the trading live room, you've got domestic focus on the March jobs report we'll get on Thursday. You've also got the April RBA meeting minutes on Tuesday. Aussie's underperformance amid rising US trade or US-China trade tensions and the adjustment in industrial metals, iron ore, has been evident in recent weeks. So wanting to see whether that started to play through in any of their meeting discussions and data points as well. So Philippe's kindly put a calendar into the chat room as well if you needed to see the context of the entire week ahead. But that's it from me. Let me hand you over to Sam, and as I say, he'll look over some of the charts from a more technical perspective. But have a good day and have a good week ahead. Thank you.
Good morning, guys. Hope everyone had a good weekend. We'll start with the euro, as it's actually just pushing towards its high now. So it's caught my attention here, and you can see not far away from the high that we made in the Asian session around, well, 2:30 that you've got there. So to keep an eye on that, and above there you have the sort of, well, R1, but also the high from Friday morning as well. So I'll be keeping an eye on that resistance level as a whole. It's quite interesting area from where we had the low Wednesday, kind of the sort of the pullback from Thursday afternoon, and then obviously Friday's high R1 and the 124 handle around that area, just to the upside. So one to have on your charts for sure. S1 lining up quite nicely with the low from Friday as well. We'll probably have a trend line drawn up using Thursday and Friday's low, just for later on there to bear in mind. But quite a key resistance area just up at that R2 that I'd want to keep an eye on. The pound, if we just push over there, you can see nice up week for the pound. Last week I should say. I would again have a trend line just from the recent highs that we made today and then Friday as well, with potential resistance to that side there, using previous lows as well from Friday and today. See price starting to just get squeezed in a bit. Quite a key level of support, I would say, using the previous highs and then the lows that we made for Friday's low, Thursday morning and Wednesday's highs around there. So on the futures, sort of coming in around 142.50, 59 and a bit above there. So keep an eye for the pound on those areas of support, or if we can get sort of squeezed in and then see a break either way here. I think, you know, it was quite a decent up week for pound, the highest we have been for quite some time. Just one to bear in mind. I think if we were to come back towards the pivot area, probably best left alone. You can see how he sort of broke through, found support on the first retest, but now it's just starting to get a bit messy. So perhaps best to leave alone before we either do push to the top end of that trend or lower down as well. Aussie dollar, which had a decent push and then reversal on Friday, you can see here lined up with pretty much in line today with the R1 is a pretty good potential support. We had good resistance on the 10th before finding support 11th, 12th, and it's today's S1, so definitely a good point of support if we were to get down to there. Obviously the higher the day is sort of quite key as well. If we were to get there, and the support level that we found really sort of using the back end of the 12th and then the lower Friday's lows as well. But key support for me looking at this market down at S1. The dollar itself actually currently on the lows of the day, so keeping an eye on the pivot here for Aussie dollar, as well as obviously euro, whether that can still push on or not remains to be seen. Dollar yen, bit more undecided in terms of overall direction. Last week you can see finally getting a bit of a break above the range that we were in early before coming exactly back down. Just below S1 today you have the high of Wednesday evening, Thursday afternoon's low, and the S1. So all, let me just go into a bit more detail on those for you to see. So key area of support if we were to get back down there. But I think better to look at this market purely from the sort of the safe haven risk on risk off standpoint. Keep an eye on what equities do, whether they continue to find support, S&P example, around this pivot or not. And it could well be that we see a bit of a reversal here. So maybe not really focusing on dollar yen as side of what the dollar or the strength or weakness of the yen is doing, more of a sort of a safe haven play, and that may lead whether we can break through this support, or if equities do hold, we might start to drift back higher towards the pivot and beyond. But again, for this market, as you can see on that longer time frame, that is the sort of the highest that we got on Friday for quite some time. So if we were going to see continued sort of strength of equity markets, if you like, then I would expect to see this pair rise higher. Speaking of equity markets, and it was such a key level that we were talking about. Let me just refresh this chart on Friday, the 26.80, I think it was 82 and a quarter. The high of the 27th, we just couldn't close above it. As soon as we got there right on cash open, admittedly, we came straight back down. For me, well, certainly for today, but probably the week in general, can we close a day above there? Can we close a week above there? Where does it line up to intraday today? Just above the R2. When have equity markets really been moving the best? Into the afternoon. So I'd be focusing on that as well. Dollar just having extended losses here to the lows of the day. So the dollar is weak at the moment, so keep an eye on those dollar pairs. Aussie dollar just touching the pivot, just the euro, and the euro as well. Let's have a quick look. Nice little pop here above that resistance area. So dollar continuing to weaken quite a bit. Decent push above. Haven't seen anything out as of yet, so we'll just go back to that S&P, but do keep an eye on that. The pivot holding quite well, a potential area of support using that sort of the gap that we had, but key area just above the R1, Friday's high, and it's going to be similar sort of play for the Dow and the Nasdaq as well for me, really focusing on those levels and can we actually push above. The gap fill has taken place in the Nasdaq, and you can see just how strong that level of support has been. Let's have a quick look over at gold, and with the weaker dollar, that pivot has held quite well, and we're starting to push above now to what has been a key level this morning. We had a low at 245, and then just before 7 o'clock, before we broke down, 1348. Quite a key resistance level for now. We're just coming off slightly So one to bear in mind. I'll go into a bit more detail about gold later on. Obviously, I know the markets are moving here. Oil, first real test of the S1, acting quite well, having broken through key level of support that you see around here, 66, 65 on the futures. Level below, around $66 to the tick, you have Thursday's low as well, so key level support. Most of the moves in oil have really happened in the afternoon, and the direction, as you see, in the afternoon has been to the upside. Starting to consolidate a bit, really between 66 and just below 68, sort of 67, well, yeah, just above 67, 67 high, yeah, just below 68, I should say. Just consolidating over the last sort of 3.5 trading days. So focus, I would say, would be on waiting to see a break out of this level to the downside or to the upside here for oil, and focus on the afternoon, probably for the cleaner trade, I would say. Any questions, please do get them in the chat. Obviously, understandably, the focus should really be on these dollar pairs if we're going to get a continuation. Euro, the main mover here, and just pushing through R1 quite comfortably there. Any questions, please do get them in the chat. If not, I'll be putting charts throughout the day. So I hope you have a good trading day and good week ahead of you guys.